Hey, what's going on? It's Amy Nicholas. Welcome back to the channel. If you're new, say hello. Let me know in the comments how long have you been day trading for. I am in month 4 and this is March 2025. And today's video, I wanted to share an idea I had about improving my day trading because of this video I watched. And I want to thank the YouTube commenter, and I apologize, I don't remember who it was, but somebody recommended a video by Mark Douglas, who's known for writing the books Trading in the Zone and The Disciplined Trader. He has a lecture, and they specifically said watch part 4. So I just looked it up on YouTube, Mark Douglas, part 4. And it came up, and it's about 2 hours long. And I put the link to this video inside my day trading resources, which you can grab for free. There's a link in the description and also one down in the comment section below. So just kind of show you what it looks like. So it says Mark Douglas, How to Think Like a Professional Trader 4 of 4 was the actual video. And in this video, he's very much talking about the psychology, the mindset stuff, why we place such emphasis on each individual trade when really we need to look at a series of trades. So instead of being like the next trade is do or die, especially if you've had a couple of losses and then you're just in the back of your mind, that's all you're thinking about is, oh, what if this is another one, right? Especially he said after 3 is like the concrete number that most people feel like, oh gosh, it's going to happen again. So he says, kind of to take away that emotional attachment to each individual trade, you have to think like a professional trader. And they think in ways of series. So he recommends doing a series of 20 individual trades and then kind of just gauging like your results from that. Now, he does say to upfront decide how much you're willing to risk on all 20 trades. And when I thought about it, I was like, well, I really don't feel great about risking my normal, like $7.50 to $10 per trade to perform 20 trades, because that's, kind of like, a couple $100. And I really am like, okay, I guess that could happen over a series of time, but I don't want all the next 20 trades to be like thinking of that in the back of my mind. So what I'm doing is, and he said you can do this in a paper account as well, but I'm going to do one share, 20 trades, and I'm going to have a stop loss, a hard stop instead of a trailing, because I need this to be consistent. If I have a trailing stop loss, it's going to vary my results. It's not easy to, to tell what's working on that. So I'm going to do a 75-cent stop loss, which is kind of on the high end for me, but I'm like, you know what? I just want to see if it kind of affects my results a little better if I have a wider stop, because I'm more often than not trading something around Tesla, which is very volatile and kind of has the need for a wider stop. Some stocks don't move a ton, like Amazon doesn't move like crazy $15, $20, $25 in a day, but Tesla very much can. So that's kind of like one of the reasons I decided, like, let's just set a really wide stop loss. So over 20 trades, one share each, 75 cents stop loss. Potentially I could, if I'm just totally wrong on every trade, it's $15. I'm like, I am more than happy with that, because that's my daily loss limit right now. And so if I just give myself leeway to practice in this experiment, I can then say, okay, this is going to be spread out. I'm sure I'm not going to do 20 in a day. I don't think that's what he was saying in this video at all. In fact, I was hoping he was going to get into that, and he never did. He never said like, try to execute them in a certain period of time. All he said was, when you're looking at your typical analysis stuff, you're looking at the chart, whatever gives you the signal to go, to buy, then just do it. Like, don't think, just do. And I've mentioned this before in like one of my recaps, that what I noticed on like a recent trade where I was green was that I just did. I didn't overthink. I just got in and I was profitable. I'm trying to get away from also using the words right or wrong, because he talks about the randomness of trades, and he's trying to just help you get to a point where you become like a robot, because that's exactly how professional day traders go. And I can tell you this, from being an entrepreneur for 10 years, the best, most successful people that are entrepreneurs, they get to a point where they can detach from the money. Like whether they're, up 1 month, down 1 month, whatever, it's let's focus on the systems. Let's focus on the process or products, that they're creating. Let's just stick to the plan. And I think that I really needed to hear that because I was starting to take things a little too personally. Yeah, and that's why I kind of was down on myself yesterday. And, and today I did a recap video for Tuesday trades. I was like, I just needed to kind of dull that feeling of emotion and attachment. It's like, no, we're here to just do the system. Like do the strategy, execute, take away the emotions, take away the feelings. And I liked that he said, whatever you decide with your 20 trades, like what's your loss and all that. He's like, you make sure that is consistent across the board. So it's not like trade 1, maybe I'll try a 50-cent stop, and then trade 2, maybe I'll try 60. No, it's like the same all across the board. And the goal is not so much accuracy in these trades, although I think it would be helpful just to see where you're at. The goal is actually to learn to detach from the outcome. He's like, professional traders, they focus on the process, not the outcome, not the result. And I like that he's a little bit controversial, I'll say, compared to a lot of the books I've read, where he's like, you're not right, you're not wrong, doesn't matter if you made money or didn't make money, it's you had an expectation when you got into the market that something would happen. And he likens it to like gambling in casinos, that you put your money in, you got a slot machine, you pull down, and you're expecting something to happen. You don't necessarily like expect to win or lose. You appreciate, I think, the randomness that sometimes you win and sometimes you lose. Money, right? And I think what he's trying to help traders with is like, just stick to the process. Don't worry about the outcome. Don't worry about the results. And don't think of every individual trade as, checkbox for being right or checkbox for being wrong or green or red. It's a series of trades that you just went in when you felt like the signal was there and you just fully expected something to happen that's random. And when I say he's controversial, it's kind of like he's pretty much saying that, you just don't know. Like, how many excellent chart readers, analysis guys are there out there that can, say, oh, look at these patterns and I see this and I see that trend line and then this Fibonacci and whatever. And they can still be wrong, right? I mean, and they can still be wrong 40% of the time and make good money. So it made me feel better in terms of like, I know I suck right now, but I don't feel like as bad as I thought I was by just taking a different approach to this in terms of, let me think about just that this is random. That I'm going to get in the market, I'm going to buy a stock, and I don't know exactly which way it's going to happen. Nobody ever knows, right? You're basing this on probabilities. Probabilities that your signals are there to buy in at a certain time and to exit at a certain time. It's all based on probabilities. And we will get better at that. The money will eventually follow that. But right now, we just have to separate the emotional ties to how we feel, about ourselves, like this self-image of, am I a good trader? Am I a bad trader? Do I suck? Am I okay? Am I really good? None of that is really a factor. And I love the freedom in thinking, you know what? If I'm just trading one share at a time and I have a hard stop, put it in, walk away. Like who cares, right? I'm totally acceptable to taking $15, total loss on trying 20 trades to just train my brain to stop correlating previous trades to current trade. Because how many times have you done this, right? Like you get in a trade and you're thinking, oh gosh, it's doing the same thing it did last time. I got in at the wrong time. It's not getting near my take profit or whatever. it's just a matter of like I said earlier, it's becoming a robot. Take that emotion out of it and you can actually perform much better. And I've heard numerous traders say this, successful traders, that the people they see, especially the ones that teach, the people they see actually doing well in this day trading thing are the people who don't need the money, which almost seems like unfair. Because you're like, no, like I'm in this to make money, right? But the people that succeed are not thinking, oh no, what if I lose and then I lose money and then I can't pay for something, or you're struggling in some other area and you're putting money into day trading in hopes that, it's like, okay, it's going to get better. I'm going to learn this new skill. I'm going to eventually be able to get paid from the market and stuff like that. But you're still trading from that perspective of it's about the money. When Mark Douglas is trying to explain, you have to trade from the perspective like professionals do. It's about the process. And I think more often than not, I've probably missed out on potential green trades by hesitating to get in. Because sometimes I think, well, that one time, I was like just trying to jump in and da-da-da. And sometimes that's true. Sometimes I do know that I am in a rush or whatever to get in the market. But the other times where I should have got in and I didn't, there's always that twinge of like, oh, shoot. I hesitated, and literally in those split seconds, you could have missed that opportunity, right? That you could have rode that wave, you could have missed it. By the time you're thinking it again, you've already missed it. And if you then pull the plug and say, yeah, I'm going to get in now, like more often than not, I'm sure, at least for me, that's the one that loses because you missed the first gut instinct of getting in. And sometimes I look at the chart and I'm like, well, I think I should get in. It kind of feels like the signal's there. And I might not even be entirely confident about my skills in chart analysis and seeing the candles in the right way, but I'll still go. I'll still get in. And I think that's kind of what was happening that I explained in my Tuesday trading like analysis recap was I had a couple of greens in a row and I was just going. It wasn't thinking because I was only trading one share. So I was just like, if it just seemed like that's the time to go, go. Like, don't be like, well, I gotta make sure and I gotta have 10 indicators that say all go, I think it's some of the trades I've executed, I feel like it's literally like a little tiny voice that's very quiet. It's like, okay now. And if you don't question it and just go, I swear those are the ones that work out. You're on, and you're not even totally confident. Like the ones where I'm almost like totally confident are the ones that lose. Because maybe I'm hesitating to get in until I think it's, oh yeah, there's all my signals, 1, 2, 3, whatever. And then by that time, the move has already happened. And it's like, okay, I think that we need to think less. Think less, do more, And I don't mean be risky and over trade or anything like that. I think it's more about overcoming fear that can show up in many different ways. There's fear of losing money. There's fear of being wrong. There's fear of over trading. There's fear of under trading, I think, where you're like, oh, I should have got in like a bunch of other times. I missed all these FOMO, right? Fear of missing out. And especially I think too, if you're watching other traders that or my case, most of the people I watch are years ahead of me. And some of them like 10 years, 15 years, 20 years ahead of me. And you cannot get to a comparison with that. It's just detrimental. You have to just be like, I'm in my lane, I'm in my journey, this is where I'm going. It's just you, right? It's you against you. It's not you against the market. It's not you against anybody else. You're not trying to compete with anybody. I think it's really this day trading thing is you versus your mind. Because everything that holds you back from going to that next level where you're like, okay, I suck a little bit less here. Everything is related to the mindset. Because the mindset is actually going to kill your chances of even understanding technical analysis. Because if you think about it, say you're like, well, I got to learn technicals. I got to, know how to do this and read the charts. Not true, 100%. But if your mindset is not in the right place, no matter how much you're studying the charts and whatnot, you will still find yourself hesitating to get in or to get out. Like, should I get out of here? I don't know. Is it going to go up? Is it going to go down? And I think for me, these trades that I'm going to be doing, this experiment, he didn't say anything about having to take profit other than he said himself he doesn't use a hard stop loss. He actually uses a mental one. But this guy's been trading, I'm sure, decades, right? For me, I have to use a stop loss. I can't say, oh, well, I'm going to have a 75-cent stop and then not actually have it there. But as far as the take profit, I kind of thought, if the opportunity was there to go for a 1.5, cool. That's, on 75 cents, we're talking like $1.10 or $1.20, whatever. If it's not there, then okay, but I think I'm going to have to figure out, what's the exit? Because he didn't really go into the exit stuff. He said just have the stop, be willing to lose X and go from there. But I think I might just do a 1-to-1, really. Like, okay, if I risk 75, I'm trying to get 75. And if it just doesn't feel like it's going in the favor of, then figure out what I want to do there. Because I got to be consistent. Every trade has to be making the same decisions so that I'm not over analyzing, right? You know what? I feel like I probably should go back and watch this video again. I was intending to as well. But yeah, he never really explained that particular part of it. It was just about the stop. And I know that the whole idea of this 20 trades experiment is to get you to be in that robotic state. So I have to be like, okay, Amy, if you're up X, get out. Like, this is the robotic formula. You're up, you're green, whatever, set amount, half of 1X, whatever. Excuse me. Yeah, so I'm going to pick a number there or a scenario. Say, okay, this equals this every trade, 20 trades. I kind of see myself finishing the 20 within 3 to 4 days, maybe. So maybe, let's see, Wednesday, Thursday, Friday, maybe end of this week, maybe into next week. We'll see how it goes. But I like the idea of just saying, you know what? It takes the guesswork out of it. It takes the feeling and emotion. Because I have not been consistent in my mornings of picking a share size. Some days I'm basing it on how do I feel? Do I feel confident, not confident? Oh, let me trade less because I feel less confident. I like the idea of like, no, one share, this loss, get in the market. So anyways, guys, let me know if you're going to do this with me, this 20 trades experiment. Like I said, you can get the link to the Mark Douglas video in my day trading resources, which will be in the description and the comment section. But let me know if you're going to try this as well. And are you going to go full share size? Are you going to just do it on a paper account? Are you going to do like me with the 1 share per trade just to make it feel real? That's just me. Yeah, just let me know. And also what will be your hard stop loss? Yeah, I know some of you guys are doing futures and stuff like that. I get it. That's different. I'm sure you have a different stop loss. I've heard that you had to have much wider stops. But with big stocks and ETFs, and I'm kind of saying like this, if you're doing stocks and ETFs, anything under $100, I think is wise to stick to that. I usually stick to anything under 60 or less, but because Tesla has just been on this downward spiral, TSOQ is actually over $70 a share. I remember trading this like a couple months ago, and it was like a $40-some ETF, and it's doubled almost because Tesla's gone down so much. So anyways, let you guys go. I'll see you on the next one. Take care.